All right, fam, welcome back. All right, so just before we get started, I wanted to just say anything we discuss is strictly for informational, educational purposes only, not financial advice. What I wanted to come to you and talk to you about today was the easiest way to find support and resistance on your charts. Support and resistance is a very key tool in technical analysis. So anytime you're on the charts, you need to figure out your levels. We talk about this every week on the weekly market report, but I wanted to just come in and give you an easy way to find it on your own charts for your own stocks, whether you're trading crypto, forex, whatever it might be. A lot of those things like crypto and forex don't even have earnings or anything like that. So there's no fundamental profits or anything, no company reports or anything like that you need to look at or can even look at to determine whether that's a good company or a good thing to buy. The only thing you have to lean on is technical analysis. And the key to that is support and resistance. So let's jump into it real quick. So what is technical analysis, right? When we talk technical analysis, what we're really talking about is the charts. So a lot of these are either line charts, but more commonly, they're Japanese candlestick charts. So you'll see the candlesticks, they have the two little lines on top of them. They're usually either red or green. And that's what we're talking about is the charts. So what the charts are doing is it's tracking price action for any instrument that you're talking about, whether it's a stock or whether it's Bitcoin or some other crypto. The charts and the candlestick charts is going to show you the high, the low, the open, and the close for the day, all those prices that happen for the day on a particular instrument, whether that's a stock or an option, right? So you want to be able to read that and understand where it comes in. The key to it is we use it to kind of try to forecast where prices are going or what the market is telling us, right? So we use technical analysis for pattern recognition. We want to know those levels where decisions are being made. We want to know when the buyers are stepping in or when the sellers are stepping in so that we can get out as well. If they're getting ready to sell it off, we need to get out of there, right? But if money is flowing into a particular stock or whatever it is, we also want to jump in and figure that out on our own as well very quickly. So this is what we're talking about here with the technical analysis. We're going to try to identify those trends, those patterns on the chart. The charts, one thing I just want to point out is charts can be on multiple different time periods, right? Or time frames. So you have your daily, your weekly, your monthly, and then for those who are day trading, true day traders are dropping down to 1 minute and 5 minute charts. Sometimes even 1 hour charts for them as well. So all of these things that I'm going to share today actually fall and work for any time frame that you're trading on. So the question really comes down to, why do we even care about technical analysis? Why do we even care about the charts, right? Well, you always ask, okay, is this a good time to buy a stock, right? Or is this a good time to sell? Should I sell now? I mean, it's run up real big. Should I sell now? Or it's really down big. Should I buy it now, right? We want to know that, right? So, and kind of answer this question. Have you ever bought a stock and it immediately went down? Okay. That's really the first rule of investing. Anytime you buy a stock, it's going to go down, right? But what we want to do is we want to figure out when we should buy a stock. We need to kind of have an idea if it's a good time or not, right? So how do you know, right? We really don't know without looking at some kind of pattern or some kind of understanding, having some kind of understanding of the stock. How do we predict or forecast where it's going? How do we know how far up it's going to go, right? Is it going to go up $5, $10? Is it going to go forever? If you're a buy and hold investor and you just love the company, you're going to hold it forever, none of this really matters for you. But for those of us that are kind of swing trading or trading in and out of stuff, or want to know when, a stock has had enough or hit a particular point and it's time to take some profits, this is what the technical analysis is good for, right? It tells us, is this a good time to buy or sell, right? And that's what we're going to look at. So technical analysis is here and it's ready and it's for the rescue. So jumping into the deep end here, support and resistance is a part of the technical analysis method where we identify those levels or points on the chart where price tends to kind of reverse. This is the place on the chart where supply and demand meet. The buyers and the sellers are battling it out to figure out which side is going to win. It really is a war when you really think about those levels. The buyers are trying to take get in there and make some profits and take advantage of the low prices, and the sellers are in there trying to take profits. And depending on how much money is flowing on either side, that is what's going to determine the direction of the stock. We need to know when these people are going to really get interested and step in high volume and have high flow, so that when we're ready to go in and buy, that we're not stepping in a landmine or doing something where it's going to be counterintuitive to our investment. Support, all right, just to give some definitions, is the price where we think buying is going to step in and it's going to get strong enough to push the price higher, right? So this is the place where we want to look for as a possible buying opportunity. And then resistance is just the opposite, right? It's the price level at which we think things are going to be a good time to sell or get out, right? Usually when you look at a chart, and we're going to look at this real quick, what you'll see is support is usually the price below the current price. So what level can we get down to before the buyers step in and say, you know what, this thing just got too cheap. It's ready time to get in here and buy some more, right? Or, you know, resistance on the other side is, all right, this thing run up too high now. So guess what? It's time for us to take some profits and get out before it start going back down again. So that's what we're talking about here today. And a lot of the times when I talk to new investors or even folks that have been trading a while but not familiar with the charts, they really get overwhelmed with this idea of support and resistance and trying to find the levels. With the naked eye, it takes a lot of practice. I've had years of looking at charts. But right now, I'm going to give you the easiest way to do it as a beginner. There's really nothing to it. And what I'm going to do is I'm just going to give a quick preview, Wall Street Yardie app. This is our dashboard. And one of the things on the dashboard that we do is we give you 6 stocks every day that we feel are on sale. I'll give you the price that we think is a good price for that particular stock. And then you can see here the sticker price for what we think that stock should be trading at or what it's worth, right? So this is giving you some new ideas, some new opportunity every day. These are stocks you might not have ever even heard of. I could not even tell you what Palomar Holdings is, but I know right now, based on their 10K and their financials, this thing should be trading for 338, but it's currently trading for 127. So this is an idea, right? So now I need to jump into the details, figure out what it's doing. But one of the things I always like to do is to understand, okay, at what level should I also be buying it at? Yes, it's on sale, but if it's going down, I don't want to keep catching a falling knife. So I want to make sure that I'm getting in when the other big money players are also getting in, so that I could ride the wave of their investments as well. Because that's the only thing that really moves a stock price, is the fact that there's now more big money investors stepping into that stock and buying that stock and creating the demand for the price to continue higher. So that's where technical analysis is going to come in, and that's what we're going to do. So let's jump in and look at a few of these. I'm going to start with Microsoft since it's on our list here, and then jump through a few more of these as well as a couple of our favorites that I know everybody loves to talk about. So first chart we're going to look at is Microsoft. So the easiest way to figure out where support and resistance is on this chart, you see there's a lot of candlesticks, there's a lot of white wicks and things like that. There's the edges of these candles, we call them wicks or shadows. Where do I draw my line? To the untrained eye, I wouldn't know even where to start. So in comes a tool we call the Fibonacci retracement. You can find it here if you're using TradingView, or even if you're using any other Thinkorswim or any other broker platform that has charts. There's usually a Fibonacci retracement in all of the chart platforms. So on TradingView, I find that here. It's usually this third one down. You're going to see there's Fibonacci retracement. If I extend that, there's a whole bunch of different Fibonacci style drawings or indicators that you could put on here. The only one we care about is this Fibonacci retracement. You see, I even favorited it here, so it's always on my toolbar ready to go. Why? Because as I'm about to show you, it's the easiest way to find support and resistance. So let's select that. And the first step you're going to do is we're going to look at this chart and find over the last 9 months, right, what is the high and what is the low. And then we're going to use our Fibonacci tool and connect those 2 points to then find the rest of our support and resistance levels on this chart. It's kind of like magic, right? So if I look at this right now, we're in March. I can go back 9 months, puts us maybe, somewhere maybe around May, to be honest. But let's just take this April low just to say, since it's right here, it's a very big low on the chart. And then the high that I see here is really here at the top, is an all-time high for Microsoft, is up here at 555. So what I did is I went here, I clicked on the low, right, after I selected my Fibonacci, and then now I'm going to click on the high there, and then boom, just like that, you see it drew a few more lines onto the chart, right? So this is the Fibonacci chart. There are default levels that you're going to get, and these are the ones that you'll see. These are the most common ones, in 618, the 50% retracement, 38% retracement, 23.6 retracement. I'll do another video if you guys are interested. Just comment below and let me know if you want me to get into what Fibonacci is, how it works, and the nitty-gritty of it. If you'd like, I'd be more than happy to provide a video for that, but just let me know. But for now, just know it's a tool that we can use to find our support and resistance line. So let's take a quick look at these lines. So we started down here at the low, which was kind of tariff day in the US. This is when Trump announced all the big tariffs for the US back last year in April. And then this is the high that Microsoft ran up to since then. So those are top levels, top and bottom levels there. What we're really interested in is finding where the next level of resistance or the next level of support is for Microsoft. And if you look over here to the right of our chart, you'll notice that once we connected this chart with the Fibonacci lines, the lines drew pretty good, right? So what you could see is here that price at this level, it got up here, pulled back a little bit. It was a little fight, right? You see the fight happening with the price kind of going sideways, and then eventually it failed and we dropped all the way down to the low. This wasn't even, we weren't even paying attention to this. We were just paying attention to this low. And again, we get right back to the same level and pull right back down again, okay? And one more time. And what happened here is we had earnings. Microsoft announced their earnings, the price gapped up, but guess where it gapped up to? Funny thing is it gapped up above it, and this red candle tells me we opened here at this level here, which is about 430.89, but then we closed right back on the line. So what kind of magic is this? What kind of OBR witchcraft it is? We don't really know, but what we know is that now we have a place where we can trade. Now we know this is where I want to see if the price bounces off, if the price reverses, kind of like we had here. It came up and it reversed right back down. We want to see that happen throughout the rest of the chart. If I look at some more of these lines, we come up here to the 23.6 line. You see, boom, price was fighting to get above it, fighting to get above it, fighting to get above it, pulled back down, settled in, and boom, it created another higher high, higher low, and it took off, and that's when we got up to our high there. And then that pulled right back to where? Right back to the same level. So I know this line is good. I know this is where some battling is happening. Same thing here. So every single one of these lines, I have multiple touches, multiple places where the battle for buyers and sellers were happening. So that's as simple as that, right? So now I have my Microsoft chart. If I'm trading Microsoft or I'm looking for Microsoft, I'm going to look for Microsoft to break this 425 area. I'm going to wait to see it close, right? So the candle body needs to be above this at the end of the day. If it is, then I can feel confident that we're going to run right up to the next level, which is 450, right? So that's what we're going to look for here. We're going to look for price to get up here, break, and go higher. If it gets up here and then it starts to form a lower high and lower low, then I'm going to expect it to drop right back down to 389. This is why support and resistance is key, because for traders, it tells you where your levels are. It tells you where you can trust it. It also allows you, in this case, where we break above and we bounce here, to allow you to put a stop loss right here. How tight is that stop loss, right? You're talking about $6 from when you buy in on this one to this low here. But you're giving yourself a little room. You're giving the stock a little room, because you know if it bounces off, this is the level it has to fight through in order for it to continue going down. So, you know, if it comes here and it bounces off, you're good. So if you set your stop loss down here, guess what? You're going to stay in it and you're going to continue in for the ride. So this is what we're looking for. Support and resistance, the easiest way to do it, Fibonacci retracement. So let's do a next one, right? So NVIDIA, right? NVIDIA is, of course, probably the most traded company on the market today. It's also the largest company on the market today, $4.5 trillion market cap, right? So that's the company's worth $4.5 trillion, right? So if we're going to take that, let's do the same thing we did with Microsoft. A lot of these, obviously, the low is going to be back in April on the tariff day. But we're going to go ahead and do the same thing. We're going to find that low. We're going to pick that low. We're going to pick our high. So let me just go ahead and delete that. So if you're starting off from scratch, you're going to come over here on the toolbar in Trading View, and you're going to find your Fibonacci retracement tool. You're going to select that, and then you're going to pick the low. It's going to connect. One of the tips I'm going to show you here in a second, and then connect the high, is to make sure this magnet is on. It will make it much easier for you to select it. So make sure the magnet is on. You can do weak magnet, a strong magnet. It will connect you to the weak magnet. I believe connects you to the wicks. The strong magnet keeps you to the body. So I keep it on the weak magnet. I love connecting my wicks, because price did get to those levels. So I have to trust that price can get there again. And that's what we can do. Now, watch this magic here that just happened on NVIDIA, right? We picked these two random dates, kind of not random dates and points. It's the high and the low, right? So we picked those, but look, we have a battle happened here even before the point, right? And if we go back in history, we'll probably even find some more of where that happened. Price ran up here, got to this level, slowed down, got back up, came back and what they call retested. Once it broke, came back and checked the level again, and the buyer stepped right in, and it boom, went right back up to the next level, right? So if we come on up to here to the 23.6 level, you'll see this is the level. I mean, this thing gets up to this level, stops, pulls back, right back down to the next level, up again, breaks through, comes back, breaks to a new high, comes back, and now we kind of going sideways, right on, up and down around this same price level of 182, right? So if I'm trading NVIDIA, right, I'm looking at this and I'm saying, well, we got back below here now. We came up, retested it, and guess what? Friday, we're looking at this level here, and it's red, and the candle is pretty weak. So I'm expecting NVIDIA to drop based on this down to 164. So let's see what happens. That should be interesting to see. As you can see, there's a lot of action here. Somewhere in the middle, what's this, about 170 level? That's a nice round number. That's probably why the buyers are stepping in here versus, down here at the 164. But either way, we know NVIDIA is coming down. It's going to be somewhere in here. One thing to note, support and resistance is never just a point. It's always an area. So, even if we're looking at this area here, we're going to give it some room. It's not always going to be to the penny, right? So even though we're seeing a lot of to the penny kind of touches here, but just know that's the area. And if you start to see the pattern of lower highs and lower lows, you expect it to go to the next level down. If you're starting to see the pattern on the other side where you get higher lows and higher highs, then expect it to work its way back on up, right? So that's NVIDIA. Let's look at a couple more. I'm gonna put in ANET here. So this is Arista Networks. This is another big technology stock. Let's practice again, right? So we're going to grab our Fibonacci line, drop it here, put it to the top, boom, there we go. Look at this. We have the battle here happening at the 786. We have another big battle here, 618, which is always a popular fib line. As we study the fibs, you'll realize that. So this is another battle here. It took off. This one went on through pretty strong. We had some earnings here, so that's where you get the gaps, right? So the earnings report came in after hours. The next morning opened up much higher, but guess what? I got up right up to this next level and boom, pull back. Okay, and then until it broke again, that's not until when you got even higher. So and then even that one pulled back, bounced even higher. So these support and resistance levels, this is what I'm talking about. It gives you a place to say, okay, I see now that the price bounced off. Why? Because it bounced off, the candle touched it here, and the next one went higher. So now I have confidence to say, okay, this is going to move forward and it's going to move higher, right? So, and then I can set my stop loss down here below the low of this candle that touched it, or even this lower one here if I want to give it a little bit more room, and feel confident that my trade is going to go up. And if it doesn't, then I know when I need to get out, right? So this is telling me exactly how my trade should go. If I'm a swing trader or day trader, these are the things we're looking at, right? So boom, that's Arista Networks. Now you say, hey, you've been looking at all these tech stocks. Let's look at something else. So PLMR, this was on our dashboard, right? So let's take a look at this. I honestly don't really know what this company is. I believe it's a insurance company. If I check my notes here, yep, finance casualty insurance company, right? So that's what we have here. So let's do it. This one, It's very interesting because remember this one it didn't have the low on the tariff day, right? So I'm not cheating. This is real life, right? So this is a stock now. It went all the way up to these highs and it pulled back here, very big way. Something clearly happened with this company. We need to figure out what's going on, but that's probably also why it's on sale. So we need to figure out what event with this company caused this to crash, and then now why it's going sideways. Because there might be a time here, since it's going sideways, it's now setting up or what they call basing, right? It's setting a baseline for the price to then possibly turn around and go higher if whatever caused this crash to be over, right? If that event or that situation is now resolved, we can then expect this company to go higher. As you saw on the dashboard, this company was a highly rated company. They have really good returns. We have a really good Wall Street Yardie score on it. The Wall Street Yardie score on this one was, I believe, like a 86 or a 96, which is extremely high, which means they're returning money back to their investors in the double-digit type returns. So some event happened here that caused that to be paused or stopped. As you could see, this company was running up big time before that. But once that event happened, then we're now back to figuring out when we can probably get in again, right? So I see there's this little intermediate high here. Let's see if we can get that connected with our fib, right? So let's do it. So we're going to take the high here. This was a high. In this case, we didn't start with the low because the high was earlier. And then I got to go find the low here. So we got this one, but this one is even lower. So let's do that. And lo and behold, look what happens. Okay, we have this. So in this case, this one is interesting because you got kind of two lows you could play here. And what I kind of like to do in this case is I'll pull this Fibonacci up a little bit just so we could connect all three of these. Like with support and resistance, the number of touches that you get is better. And because this one peaked down when I did that a little bit, I'll use this low instead. So this is one of the few times you have to kind of adjust it. You know, but it's going to be based on those lows, or I either move it up to the body of the low candle or the edge of another close low candle like I did here. And you can see that we still have these two are touching and coming off that line. So if we go back and now let's see if our lines are good. Oh, nice rejection here. We got some nice rejection and bounce here, right? And we tested it again and bounced higher. So this line is definitely good. Remember, this is our intermediate high here. Look at this. Like I said, the support and resistance is always an area. So there's a lot of times it will peek through a little bit, just like you have here. So what I can then do is I can go and draw a horizontal line and just give myself a little room here. And in this case, I'll like to use a dash, right? Just a little tip for you there, right? So I know when price gets above this now 136.58 level, that's when I can expect it to truly get up to 142, right? But right now, the stock is just kind of trading in this zone. We marked it with the fib lines, and we see it with the Fibonacci lines already. And now we see what's happening here is that we broke down, we came back up. Now we kind of closed above this one, which is the 125.10 level, and we have a higher high and a higher low. So now I can expect this stock to probably get up here to the 134 level here in short time, right? So that's something you look at there. You know, based on the angle here, we could probably do something. I'll grab a trend line here, just so I'm giving you a few little extra tips here. So I drew a little trend line. So the trend line tool is in your lines tool up in trading view, right? So I found my trend line there. I drew it here on this angle. Let's just test the angle a little bit, see if it matches up. It's a little steep for that one. The angle's good there. The angle's good here. Right, so what I'll do is I'll probably shorten it and just pull it down a little bit just to hopefully match up the duration or whatever. So that's a little advanced charting for those of you who are familiar with charting already. As you can see, the angle holds pretty good. So if I throw that angle back on here from this level, sure enough, look where it takes me to, right? And that was not planned. I just drew that ad hoc for you guys. So, you know, look at that. It takes us right back up here, and we can expect price to get here around March 23rd. So this is the predictive nature of charting and technical analysis that I was mentioning earlier. Is you can now, based on angles that have happened in the past, start to set your own angles and put these types of things on the chart and figure out, okay, where should I expect this price to go? And at this level, I would then expect to take some profits off the table because there is a high risk, as we could see here, and we could see here, and we could see back here, that price is going to get here and reverse, right? So then I'm going to start taking losses again. So I want to make sure that I'm going to protect myself at that level. If it does break through and break out, you know, my next level to watch for is 142, right? And so on and so forth. You now have all the levels because you drew the fibs onto the chart, so you now know exactly where to expect price to go for any trade that you're jumping into. All right, so one more before we go. So I'm gonna just jump into another one. This was also on our dashboard. I was a little curious. So if I go back and say follow true 9 months, right? So I probably want to go back here to grab my fib. This low here kind of works out perfectly for the timing back in June, right? We're just going to find a low on the chart, right? My chart, I like to keep 1 year view on the daily charts. So I could always come here, find the low, find the high, connect the two dots, and you can see here, boom, we have what they call a double top. So we had a top there, we had a top there. If I look back in history, price kind of blew through it there, so we can go back if we want. But here again, there's a little battle here. Bounced off, came up, bounced, came back, bounced off, got to that high. Same thing, bounced off here. So we have a lot of support happening here, but in this time it broke through. We're heading into earnings, so maybe the news kind of leaked and the stock kind of dropped from that point. So you see it's kind of gapping its way down, but every time it comes back up, it gets back up to the same area. So that's another area. And then if we look down here, we have some great support down here as well. So these are the areas that we're looking at. So that's a really quick way to draw support and resistance. So before I go, let me show you how to put the settings for the Fibonacci retracement. So once you draw one on the chart, you have to draw one on the chart first. But once it's there, so you can set up these levels just like I have them, what you're going to do is click on one of the lines, and you'll see it get selected here. You'll see this little blue here on the side and the blue on the bottom, so you know you selected it. And then you should have a little toolbar somewhere on your screen. Mine is up here at the top. Yours might be on the bottom. Just look for it. You'll see it here. And then you click on the little gear where there's settings. Click on that. And then it's going to bring you to this pop-up. And in this pop-up, you just want to enter these numbers just as you see them here, right? These are the different Fibonacci levels that we use. These are standard levels. A lot of these will already be programmed in there for you. But the key thing I want to show is for the number 1, I make mine yellow just so I know this is the start. And then the 0 is I make that one yellow as well, since that's the end. So I know the top and the bottom of where I selected it and where I set my levels, right? So that's the only color change I make. I take the trend line off. It adds this diagonal line. You don't need that. And then I also make sure that on the extended, it extend left and right, so I can go back and forward in time. That way I can always see how the levels performed over time as I move through the chart back and forth. All right, so that's how you set up the levels. That's how you set up the things. The other thing I do is actually I put the labels in the center and then middle, right? That way they show up in the center of my chart. Otherwise, it's going to show either to the left or the right. Not sure what the default is in TradingView anymore. I've done this a long time ago now. But that's what you want. So once again, here are the levels. So just pause the screen here, and then you can enter these on your screen. So that's what it is for now. So catch you on the next one. Thank you for watching, and don't forget to like and subscribe. Thank you.